Hello traders, this is Blake Morrow and you are listening to the week ahead video for November 25th, 2018. Now, I hope you guys had a great Thanksgiving holiday, especially for those of you in the US that were celebrating. For the rest of you, I hope you just enjoyed a low volatility Thursday last week. Anyway, I hope you guys are also having a great weekend. Now, before we get into the charts, I want to say that our Cyber Monday sale is live. So if you had any idea that you were going to come be a part of the ForexAnalytix community, this is the time to do it. It is buy 1 month, get 1 month free. So it's basically 50% off for 2 months. It's a great deal. And once you sign up, make sure that you click on the mobile app so you can or download the mobile app in the App Store, the Google Play Store, whether you're using a mobile device or even a tablet. So this way you have our analysis anywhere you go, no matter if it's around the house, while you're taking a shower, maybe doing your grandkids' sports, at the grocery store, wherever, but make sure you have our analysis on the go. So, take advantage of the Cyber Monday deal. It's buy 1 month, get 1 month free, and it's going to be live until the end of Monday, early Tuesday morning if you're in Europe. And take advantage of it. Get signed up today. Okay, now, I'm going to cover just a couple of quick things before we go into the charts. We have a new feature that we added to ForexAnalytix. Is this new rates feature, which you can actually pop out the rates, move them to, if you have multiple monitors like myself and you want to put the live rate somewhere else. It's a really nice feature. We're constantly adding new features and new benefits to ForexAnalytix subscribers. So this is just one that we added this week. So our development team, hats off to you guys we're working on that. Now, let's talk about this next week. This next week is actually pretty busy. We have a lot of data that's coming out, and we have actually a couple we have a big meeting at the end of the week with President Trump and Xi from China. So that's going to be a really big meeting at the very end of the week. This potential trade talks. And speaking of which, those are going to mostly affect the Aussie and the Kiwi. And if you look at the Aussie dollar really key resistance comes in at 73 cents, and above that is the 200-day moving average, which comes in just above 74 cents, maybe closer to 74 cents by the time the 200-day moving average tries to meet price. But as you can see, we're up against a really big resistance zone just above the 73 cent level that the Aussie will be facing. Now, speaking of data this week, as soon as the market opens on Sunday, we're going to have retail sales out of New Zealand, and that comes out just as the FX market is opening. So keep that in mind. We also have the RBNZ governor, or is going to be speaking on Tuesday and releasing the RBNZ financial stability report, which is going to be a big deal for the Kiwi and the Aussie. And in Australia, we have private capex numbers on Wednesday afternoon or Thursday morning, and then also the Australia-New Zealand business confidence as well. And then there's more data that's going on throughout the course of this week, but the reason why I'm pointing out the Aussie and the Kiwi specifically is because of the U.S.-China trade talks. Now, something else happened over the weekend. We had out of the U.K., or regarding Brexit rather, is we had the EU approve the Brexit deal as it stands. Now, the big vote is going to be in the UK Parliament, which was announced over the weekend that it will happen before the Christmas holidays. Just because the Brexit plan passed through or was approved by the EU doesn't mean that it's going to go through the UK Parliament. I mean, that's where most people believe that we're going to get stopped up. And I got to say that the pound looks like we are range bound between 128 and 131, and probably will remain so throughout the course of December as we await the UK Parliament vote. And as it stands right now, it looks like it is going to get shot down. That's why I doubt that even there might be a gap up over the weekend in the cable, maybe closer to 129, and we might get drug higher towards 131 with general US dollar weakness. I don't expect the pound to be breaking out unless there's been a breakthrough with the DUP and in the UK Parliament, and we start to see some positive comments. Realistically, it looks like the cable might be facing a downside break come the end of the month. But the Brexit is a very live and fluid situation, and I think the market realizes that things can change. So I believe that this consolidation is going to last for a couple more weeks. Now, speaking of which, let's take a look at the euro dollar. The euro dollar, and we still have this longer term inverted head and shoulder pattern. That's on a weekly chart. But if you look at the daily chart, we've been capped by this down channel. Now, I'm going to take you over to the euro the way I have it drawn up here on my charts, and you can actually see it on the 4-hour here. It's the same 4-hour chart on ForexAnalytix, but I want to dig a little bit deeper detail because I didn't do the analysis over the weekend since it was a long weekend here in the US. My team put together the rest of the analysis on ForexAnalytix, but I'm just going to dig a little deeper here. This looks like to me an inverted head and shoulder pattern. A lot of you might look at it and saying, oh, well, that's a flag pattern, but the distance of the flag has exceeded 50% of the pole, so it doesn't really qualify as a flag in my view. But that doesn't mean it can't be bullish. I mean, as an inverted head and shoulder pattern, the neckline comes in at 1458, or let's just say roughly 1450. A move above, the 1450 level, and then the euro is going to be pointed a lot higher, in my opinion. So, if we see overall dollar weakness, especially against the euro, could it drag the cable, out of this range? Out of this range here, quite possibly. But I think the cable is going to be more reflective of what's happening regarding Brexit and how the UK Parliament debates the upcoming vote. So that's going to be more important, in my opinion. Now, a couple other things that I wanted to bring up this week, for this week, and specifically, I want to talk about the dollar yen because, the dollar yen, if you look at it, the currency pair has held up really well despite equity market weakness. Now, if you look at the dollar yen, it's really held this 113, 112 level. And we have a nice little uptrend line. Notice how longer term we still have higher lows. Okay, higher lows. Now we are do have a series of lower highs, so you can say it's a consolidation. However, it hasn't sold off, and the reason why that's such a big deal. Let me take the S&P for a second. S&P 500. Let me pull up this is the CFD from Oanda. It's like the futures, basically. You can see the S&P is near some trend lows here, and this doesn't have any drawings on it, just has a couple moving averages. Now I'm going to overlay that with the US dollar Japanese yen. Okay, and let's pull up just a feed of US dollar Japanese yen, and matter of fact, let me make this a line. So I'm going to make it a line chart, a little easier to see. Now, what you see here is, a pretty strong correlation. It always has been, the U.S. dollar, Japanese yen, and the S&P. But let's focus in really on the last, let's focus on the last several months, if not, the whole year. Okay, so this is, all of 2018. Very tight correlation. S&P sells off. Okay, bounces back. The dollar yen sold off, consolidated, as the S&P was breaking down. S&P bounced, the US dollar Japanese yen almost bounced to new highs. Once again, we sell off in the S&P. The dollar yen's downside has been limited. If the S&P starts to get a bounce here, could the dollar yen potentially break higher. Or, let me actually grab a different line here. Could the dollar yen break higher out of the consolidation? My opinion is yes. And that is the risk with the dollar yen currently. A lot of traders have been scratching their heads, myself included, looking at the dollar yen saying, man, I cannot believe the dollar yen has not sold off. It has not broken down as the S&P has been so weak. Those traders, especially if they're trading with this correlation, have probably been very frustrated. So if we start to see risk bounce going into the end of the year, that could actually turn the dollar yen back above towards 114 and quite possibly above 114.50. And 114.50 is a big deal. Let me go over to the weekly chart here, and you can see what a big deal the 114.50 is. Resistance going back all through 2017. Resistance 114.50, 114.50, 114.50, 114.50. We get above 114.50, 115. This dollar yen could really explode higher. Again, it has not sold off with risk, and if risk bounces towards the end of the year, could we see that big boost? Now, why would the S&P bounce? Why would, or what would take us higher? Well, there's a couple things. First of all, seasonality. As you guys probably have heard, you get a Christmas, Santa Claus rally. Well, if a Santa Claus rally does manifest in the market, let's say, the next couple of weeks into the first week or two in December, we start to see a rally going into Christmas, that could, put the S&P back at, let's just say 2,800, maybe even, 2,850. How about if the meeting between China and the U.S. goes well this week, at the end of the week? I think the meeting starts November 30th. We're talking 5 days from today, and it stretches to November 1st. One thing that we've come to realize with President Trump is that the stock market does matter to him. It's a barometer. It's how he views the success of his presidency, and he knows that a successful meeting between China and the U.S. is going to reflect good in the stock market. And if he wants to continue to play hardball, he probably will. However, following the meeting that goes between, President Trump and I guess President Xi in China, that meeting, following the meeting, all the news is going to be squarely on President Trump, and he's probably going to spin it in a positive light. No matter how he comes back to China and the response over the course of the next few months, as we get into early next year, he's probably going to spin this meeting as being a very positive one, and they had positive talks, and that the stock market probably will reflect positively as a result. And if so, where does that put the dollar yen? It probably puts us closer to 114.50, or maybe above 115 eventually. So that's why I wanted to point this out, because I think the dollar yen is up against resistance. It has been very resilient. It has not sold off, and the risk of a move higher is quite high. So just think about that with the yen pairs, as the dollar yen, and you can look at other yen pairs too. I mean, even if you look at the the euro yen, which has been under a little bit of pressure as of late, we're still consolidating, and could the euro yen trade back above 130, closer to 130, 132, 133, maybe even 135 moving forward? I think that is the risk, and so towards the end of the week, we're gonna be watching how this meeting between these two world leaders go, and if it looks like it is a positive outcome, I would expect yen weakness and dollar strength, and maybe other currency strength, and that could set up for dollar weakness, because as long as the market views that the trade talks are progressing and things look like they're getting better, the dollar could weaken as a result, and that means the euro could actually trade higher, the yen could trade weaker, the euro yen could trade higher, the dollar yen could trade higher, so on and so forth. So guys and gals, I'm gonna wrap it up with a couple things. Once again, if you were on the fence about joining the ForexAnalytix community and being part of, our community and being in our chat rooms, our private chat rooms where I'm at all day, and our team is at all day, make sure you sign up. It's buy 1 month, get one month free. Try it out. It's 50% off basically for the next 2 months. So you can go into the end of the year trying us out, and then click on this little icon, which will take you over to the chat room, and you can log right in here and be part of our community that is private for our ForexAnalytix members. And also, if you like this video and you think that what the information I've given you over the course of the last 15 minutes has been beneficial to you, make sure you give us a thumbs up on YouTube, and make sure you subscribe to our YouTube channel so you don't miss any of our great interviews that we produce throughout the course of the week on our free face webinars. And guys and gals, my name is Blake Morrow with ForexAnalytix. I hope you enjoyed today's video. Good luck this next week as we wrap up November, and I'll see you next weekend. Have a great day.